To get a personal loan, start by checking your credit. Then, determine how much you need to borrow and ensure it's within your budget. Before applying, get pre-qualified with multiple lenders and compare quotes. Submit an application with the lender that offers the best deal. Here are 7 steps to guide you through the process. 1. Check your credit score. You don't need a perfect credit score to get approved for a personal loan. In fact, some lenders specialize in working with borrowers with bad credit. However, some of the best personal loan interest rates are reserved for borrowers who have good credit or better, starting with a FICO registered trademark score of 670. You can check your FICO registered trademark score for free. 2. Calculate how much you need to borrow. Understanding how much you need can help ensure that you don't borrow too little or too much. What's more, personal loan companies typically have a range of loan amounts they offer, so knowing what you need can help you weed out lenders that can't meet your needs. Keep in mind, too, that some lenders charge an origination fee, which is deducted from your loan disbursement. As a result, you may need to borrow a higher amount to account for the fee. For example, let's say you need to borrow $10,000 and the lender charges a 5% origination fee. Simply divide 10,000 by 0.95 to get roughly $10,527, which is the amount you need to cover the fee and still get a $10,000 loan disbursement. 3. Calculate an estimated monthly payment. Once you know how much you need, research personal loan interest rates to get an estimate of what you might qualify for based on your credit profile. Then use a personal loan calculator to calculate your monthly payments and total interest charges over the life of the loan. Running the numbers can help you determine whether you can afford the payments on the amount you want to borrow and give you an idea of the total cost. Get pre-qualified with multiple lenders. You might be tempted to just apply with the bank or credit union you already have a financial relationship with. But while it can be helpful to have all of your finances under one proverbial roof, you may be able to save more money with a different lender. The good news is that many of the best personal loans offer pre-qualification. This allows you to view and compare rate quotes with a soft credit inquiry, which won't impact your credit score. The process typically only takes a few minutes, so try to get pre-qualified with at least 3 to 5 lenders to get a good sample of offers. Compare all loan terms. While a personal loan's interest rate is the most important factor to consider, it's also crucial that you consider other loan terms, including repayment terms. Personal loans may come with terms ranging from 1 to 7 years, but some lenders offer more flexibility than others. A longer repayment term can reduce your monthly payment, but it'll typically also result in a higher interest rate and more total interest charges. Fees. Personal loans typically don't come with application fees or prepayment penalties, but some lenders charge origination fees. In some cases, the fee can be as high as 12% of the loan amount. If you have great credit, try to focus on lenders with no origination fees. Loan restrictions. You can use a personal loan for just about anything you want, but some lenders have restrictions in place. In most cases, it's reasonable. For example, you often can't use personal loans to pay for secondary education expenses or to buy investments. However, some lenders may only offer loans for debt consolidation or other specific purposes, so make sure your needs align. Funding time. Once you're approved, most lenders will fund your loan within a few days. But if your need for cash is urgent, try to find lenders that offer next-day or even same-day funding. Discounts. Many lenders offer an interest rate discount if you set up automatic payments, and some offer another one if you have an existing relationship with the financial institution. In many cases, these lenders incorporate that discount into your quote, so make sure that you qualify to get an accurate idea of what you'll be paying. Choose a lender and apply. Once you've decided which lender has the best offer, you can typically apply via the lender's website. The process can vary slightly depending on which one you choose, but in general, you'll need to provide the following information: name, date of birth, social security number, address, contact information, desired, loan amount and term, loan purpose, employment and income information, housing status and monthly payment, driver's license or other government-issued photo ID. You may also need to provide income documentation, such as a pay stub, W-2 form/T4, tax returns or bank statements. The lender will formally review your credit and a hard inquiry will appear on your credit report. This remains on your credit report for 2 years and may temporarily ding your credit score by a few points for up to a year. After you submit your application, you can often get a decision within seconds, though some lenders may take more time to evaluate your financial and credit profiles. Review the offer and accept the loan. Unlike pre-qualification, an official loan application typically requires a hard credit check, which can impact your credit score. This deeper dive into your credit worthiness allows the lender to give you a firm offer, which may or may not be the same as the initial quote. Once you're approved, review the offer and the loan's terms and conditions to make sure it's the right fit. If your terms aren't quite what you expected, you can go back and apply with a different lender. If you're happy with the terms, sign the loan agreement and the lender will disperse the loan funds.